Good
night,
Bond
everyone.
anticipation.
Good night, Ken, thanks.
What page is it?
85 in the book.
Okay, are we on?
22 on the sheet.
Okay.
We're rolling.
Bond anticipation, on the sheet 22.
Thank you. What in the book?
I gotta get there.
It's 85 in the book.
Thank you.
So bond anticipation notes
What was it
are,
up to?
I'm sorry, what page?
85.
Thank you.
that's our principal and interest payment on short-term debt. We had a short-term debt issuance in August of this year. That is my estimated repayment that would be due August of next year. And, we have flexibility with the repayments on these, but this is, I try to pay this straight line, pretty conservatively, I think responsibly. So, this is the scheduled payment that I calculated on the principal and interest for that note that we borrowed in August. You will see an increase. The debt did go up a little bit year over year. That's in the, if you look at the debt limit calculations, you'll see a slight tick up there. So we had to pick up some principal and interest payments here.
But when you sit, when it says 79.5 unfavorable, that's because that money was used to pay down the debt, but it's not really reflecting what interest we might be saving on that debt, correct? So it's really probably not as unfavorable as it looks, or
Well,
is it not that much?
I'm not sure if I'm following the question, Bill. I mean, in terms of, we have very good interest rates. I mean, our last,
Right,
our net effective interest rate on the last borrowing was approximately 1.25%.
But is that difference of 79.5 what we paid down? Like, so we paid something off that we were just still paying off in time. Is that correct?
No, what,
79.5.
you're comparing the 392.5 to the 472.
Oh.
Essentially, the way these bond anticipation notes work is that I'll borrow for,
These two,
we pass bond ordinances all the time, right? Every month or two, there's a bond ordinance. Once a year or more often, sometimes it's been twice a year, we will do a borrowing against multiple bond ordinances. And the principal that we schedule to be paid on that, because the principal payment is due 1 year after you borrow the money. So what we do is, I have to do a whole schedule on this. For example, the bond ordinance, we could be borrowing for, I'll give you the info. It might be easier if I just tell you
No.
give you a real life example here.
Charging me up, man. Good for another couple hours. That's why I'm still asking questions.
We're all getting a little giddy here. I think you're.
Is that 10 o'clock's not looking good?
No,
Yeah, I
not.
was gonna say. Well, that was like, of course it's not gonna be 10, right?
I know it's going to be bad.
Right,
What else would you look at? What else would you be looking at?
Finance committee.
So on this right here, this was a borrowing we did in August of $5,495,000 against a number of bond ordinances. So what I will do is then I'll take, for every underlying bond ordinance I'm borrowing against, like if it was a police car, it'd be 3 years. If it was a DPW truck, it might be 15 years. I do the straight line math of what principal payment would be due in a year. 1/5 of a 5-year asset, 1/15 of a 15-year asset, and I schedule out the principal payment for the following year. So that's what that is. So this is
Right, but that's what I'm saying. So,
right.
so we're saving whatever interest that would.
Oh yeah, I mean this is you're paying off, like if you took a personal loan, whatever, your own
Right,
life. I mean this is
yeah.
an installment payment on a on a loan. Now, once again, some assets are being paid off faster than others because they're a shorter term asset.
Right.
You know, while some are, you know, in some cases we pay off the maximum generally 20 years. You know, we pay something off like the sewer work and the stormwater work be 20 years. So.
Right, so, yeah, to kind of go on my original question, so even though it says in the budget that it looks like it's an unfavorable by 79.5, it's actually, but we're
Paying
saving
off.
some money as well, ultimately, but that was really my.
Yeah, you know, except for, you know, you are taking on more debt, which is
Yeah,
some of the reason that's generating there, so.
okay.
Yeah, you increase
All right,
the
good.
principal, you can save on the interest.
So our debt went up 79,000, Joe?
79.5.
No, you year over year? No, it went up. Our debts,
Yeah, you wish.
do you have your prior year budget in front of you? What you can do, Patrick, is take, if you look at your prior year adopted budget and go to page, go to page 13, the debt limit calculation. Here's where I project the total debt. And if you compare this number to last year, no, it's up a bit. And then you can see like this is the percent of the debt limit we've used. So we're at 42 million outstanding this year, 28% of the limit. So if you compare it to last year, you'll see that number there. I just don't have it handy in front of me.
See 28%.
We've used 28% of the limit. That's the limit. Basically, the constitutional debt limit is a percentage of your full assessed value. But as part of that calculation, like public information transparency, we give you the
Would you go
total
to
projected
cigarette?
debt
Did
we
you go smoke
anticipate at the end of the
cigarettes?
current year. So at the end of 2019, this is what
Cigar.
we're anticipating is our total debt. So if you look at last year's budget, the 19 budget, you'll see that number. And those difference between those two numbers is the increase in debt from one year to the next.
And
So ten minutes
was it
worth.
100,000, 200,000?
Oh, it's on millions probably.
We have
I
millions.
don't think I know.
Oh,
Yeah.
In debt.
no, I don't think I do.
Let's try the cigar room.
Is that sustainable, Joe?
I will by the end of the
Big
week.
I'd
enough.
like to see it, I'd like to
I
see
will
it
by the
go
end of
the
the
opposite
weekend.
direction, you know, but once again, it brings up the larger issue
Saturday.
of, I mean, we can work in the budget right now, but once again, it's the issue of taking on and doing these projects and this work. You know, we are taking on more debt. I don't think that's any secret to anyone, but,
But we're not doing it irresponsibly.
you're not doing it irresponsibly. I mean, you know,
Well,
we're well within our
Previous
limit.
debt wasn't irresponsibly added on. Correct?
I mean, the reality is, you know, without getting into a philosophical debate on it, you know, the projects that we're taking on I mean, you have an opportunity to evaluate every single bond ordinance that comes in front of you and whether or not that's a worthwhile project or not. So our debt budget is a reflection of, you know, what the Common Council is approving, right? So, you know,
Again, some of
that's
these-
the cost of doing these projects.
Yeah, but it's, again, some of these things have come to this administration that, in my opinion, were just passed on by past administrations.
Oh.
And at some point, you have to fix some of these things that
You gotta
Sure.
do it,
that
yeah.
are wrong in the
Right.
city.
Right.
The infrastructure, yes, many times we're gonna pass the buck. The roof, for instance. I mean, we could have just, can you put some tar up there and patch it up?
Keep Pales
No, it's
strategic.
I mean, it's some projects, many of these projects came through, in my opinion, they were just passed on from previous administrations, and at some point, you gotta say, we gotta do what's right.
The
We do it the
largest
right
stressor on these, just so you're, the largest stressor on these numbers is not the equipment, it's these large infrastructure projects. That, once again, these are big projects, whether it's a Jacobs Valley, Washington Avenue, I mean, these are, in the millions, and in some place, Washington Avenue was north of, exactly. So,
That's all your ward.
These are large projects. Even when you spread them out over 20 years, they're expensive, right?
Well, a lot of them we're doing at a reduced, a fraction of the cost too, like the
Oh
Henry Street.
yeah, if you didn't have the
So some of
grants, I
them we
mean,
have to
imagine what
pay.
these numbers would look like without grants.
So,
I mean, that's what's kept it manageable, quite
Yeah.
frankly.
yeah, so you gotta, you really gotta,
mean,
you're
you
not
gotta
gonna
fix-
say, no,
you gotta fix the
we'll do them in
infrastructure.
4 years and
Right.
pay like,
Gotta fix the infrastructure.
20
You
million
can't just
instead of
keep on
3
paying.
million.
Right. So if you say no and you don't want to take on debt, then,
Yeah,
right, I mean,
Yeah.
what's the alternative?
and eventually it's,
You
that's
know.
what happens.
And
No, I like what you're doing, John.
And obviously,
I think
we've been
you got a
trying
good
to
handle
use,
on it.
we've been trying to use the fund balance to pay down some of the, some of the debt. At the end of this year, we have now the authority to pay off the rest of our retirement system amortization debt.
Yeah.
Perhaps in the future, we could look at, will there be ability to pay off some of this other debt, some of the short-term debt, so.
What's the name?
All right.
Hospital and medical insurance,
Oh,
Yep. That's total
77,
variance.
Oh,
sheet
no.
23.
Take a break before this?
$50,000.
That sounds good. Next.
what is it,
Any
favorable?
questions on
Yeah.
that? That's,
Oh, wow, yeah, that's,
yeah,
say a little bit.
That's retiree medical insurance.
expenses
That
paid.
was page 77.
That's all contractual.
Yeah,
Nothing we can do about it.
and that brings us to
Tax collection,
tax collection, which
24 and 24.
is 24.
Oh, what does that mean?
He's
It's
the
same
tax
number of
man.
votes.
Whoa, tax.
Tax collection.
Hey, keep your day job.
Yeah, you got that right.
Total expenses is favorable
First time
by
I've agreed with you in a while.
$20,825.
Yeah, I mean, there's not a lot different here. This is where I moved the seasonal employees over to, that were pulled out of the other line,
Mhm.
put in here.
Just think everyone should know the sheet and the page number match on tax collection, just so you know.
And,
Yeah, that's, yeah,
It's like there were those, never mind.
what are you looking at?
good old.
His sheet number and our budget
Sheet
page
and
number.
page number. are the
What a
same.
coincidence.
So John,
It's
these are
weird.
all,
It's freaking me out.
even the regular pay line is part-time people?
Full-time, they're full-time.
Places you move them. Oh, the
Oh,
seasonal.
I moved to seasonal.
Oh, the seasonal employees, line one.
Yeah, I have, there's an employee who was a retired City of Kingston employee who worked for the assessor, who's been coming back for a number of years for us for work doing seasonal tax collection. So,
Okay. Transfer to debt service.
that is our bond payments.
Page 81.
That's sheet 25, page 81. Favorable by $212 million.
Yeah.
Keep transferring.
That is just the way the cookie crumbles on that.
Quake on that?
Okay, so you'd be interested to know, because this was page 28, which somehow didn't get printed, for whatever.
Which one are we on? Still?
Huh?
Transfer debt service?
No,
Oh.
no, the total general government.
Okay.
All these departments we talked about tonight. The total variance is favorable by $539,421.
Sales tax.
Priority.
If you went through every one of these and added them up,
Bar.
which there was a sheet on that, which somehow,
All right, that's
for
good.
whatever reason, it's not there, I don't know why. Okay. And you'll see this figure next week in the wrap-up, because there's a chart on that which shows the variance for each of the 5 meetings that we discussed. DPW, police, and the ancillary thing, animal control that goes into that. Fire and the 4 or 5 other departments that go into that. General government, and what did I forget? Here, that's it, all 5.
Just the one thing that we didn't talk about with Kyle here is the capital plan, because there is something from his department. Do you know what that, he's asking, because it's a significant number?
Computer servers and equipment.
I thought we had talked about that earlier.
Nope.
No, wait a minute, is there anything in?
We could have, I just don't remember.
Not while he was here. We
No,
didn't
no.
have the capital.
I thought it was a couple of meetings ago. Anyway.
Here's his breakdown.
Good point, IT department, right, computer services and equipment.
Catch moose.
Do you want me to read?
Yeah.
this? Okay.
Capital budget of Yeah, we didn't ask Kyle about that.
And if you have further questions, you can email them. The city servers purchased in 2013 are needing a replacement next 12 to 18 months. There are currently 20 virtual machines running on the servers. And we have been seeing signs of utilization issues with the recent additions. Part of the upgrade would be the hardware to support future servers going out 7 years, and also software licensing for us to upgrade to the current level of Microsoft Server 2019 Standard Edition and Microsoft SQL 2017 Standard. His cost breakdown is servers hardware setup $95,000, server setup installation $12,000, server licensing $10,000, and he estimated $120,000 total.
That's it. That's what he's asking for. Can we get a copy of that?
Okay.
Or somebody's gonna come up with a question at the wrap up.
Yeah, I can.
If you have a copy, you'll be getting a wrap up, right?
Yeah.
But somebody's gonna get, not here today, is gonna say, what was that for? We're
Sure. Yeah.
Okay, so wrap up is next Monday.
Yeah, I didn't even send it out.
Can't wait.
Go check.
Warp up.
Till before 10.
I make a motion to adjourn?
I second it.
All in favor?
Aye.
Aye.